Feeling overwhelmed by the thought of writing a business plan? You're not alone. Hello everyone, welcome back to X Matrix. In this video, we'll demystify the process and break it down into manageable steps. By the end, you'll have a clear understanding of how to create a business plan that works for you. Whether you're seeking funding or simply need a roadmap for your business, a solid plan is essential. So, let's dive in. First, let's clarify what a business plan actually is. It's a formal document outlining your business goals, strategies, market analysis, and financial projections. Think of it as your business's blueprint. A comprehensive business plan typically includes these key sections. Executive summary. The executive summary is a brief overview of your entire business plan. Think of it as a snapshot. It summarizes the key points and entices the reader to learn more. It's written last but placed first in your plan. Why is the executive summary so important? First impression. It's the first impression you make on potential investors or lenders. Time saver. It allows busy readers to quickly grasp the essence of your business. Decision maker. It helps readers decide whether they want to invest more time in reading the full plan. A strong executive summary typically includes these key components. Company description. Briefly describe your business, its mission, and what problem it solves. Product/service offering. Summarize your products or services and their key benefits. Target market. Briefly describe your ideal customer. Competitive advantage. What makes your business unique and better than the competition? Marketing and sales strategy. How will you reach your target market and generate sales? Management team. Briefly introduce the key members of your management team and their relevant experience. Financial highlights. Summarize key financial projections, such as revenue, profitability, and funding needs, if applicable. Funding request. If applicable, state the amount of funding you are seeking and how it will be used. Company description. The company description provides an overview of your business. It explains what you do, why you do it, and what makes you unique. It sets the stage for the rest of your business plan. Why is this section so important? Creates clarity. It clearly defines your business and its purpose. Builds credibility. A well-written description demonstrates that you've thought through your business thoroughly. Attracts investors. It helps investors understand your business model and potential for success. Internal alignment. It helps your team stay focused on the core mission and values. A compelling company description typically includes these key elements. Business name and legal structure. State your official business name and legal structure, sole proprietorship, LLC, corporation, etc. Mission statement. A concise statement that defines your company's purpose and core values. What are you trying to achieve? Products or services. Describe what you offer. What specific products or services do you provide? What are their key features and benefits? Target market. Define your ideal customer. Who are you trying to reach? What are their demographics, needs, and pain points? Unique selling proposition. USP. What makes your business different and better than the competition? What is your competitive advantage? History. If applicable, if your business has a history, briefly mention key milestones or achievements. If it's a new venture, you can skip this. Location and facilities. Briefly describe your business location and any relevant facilities. This is more important for brick-and-mortar businesses. Market analysis. The market analysis is a research-driven section of your business plan that demonstrates your understanding of the market you're entering. It's not just about guessing. It's about backing up your claims with data. Why is a strong market analysis so vital? Validates your idea. It proves there's a demand for your product or service. Identifies opportunities. It helps you uncover untapped market segments or niches. Informs your strategy. It guides your marketing, sales, and product development strategies. Attracts investors. It shows investors you understand the market and have a realistic chance of success. A comprehensive market analysis typically includes these key components. Industry overview. Describe the overall industry you're operating in. What are the key trends, growth rates, and challenges? Target market analysis. Define your ideal customer. What are their demographics, psychographics, needs, and buying behaviors? Market size and growth. Estimate the total market size and its projected growth. How many potential customers are there? Competitive analysis. Identify your main competitors. What are their strengths, weaknesses, pricing strategies, and market share? SWOT analysis. Optional but recommended. Summarize your strengths, weaknesses, opportunities, and threats. How do you gather this information? Here are some effective research methods. Secondary research. Use existing data from sources like industry reports, market research firms, example, Statista, IBIS World, government statistics, and online articles. Primary research. Conduct your own research through surveys, interviews, focus groups, and customer feedback. Organization and management. This section describes the legal structure of your business and the people who will be running it. It's about demonstrating who's in charge and why they're qualified. Why is this section so important? Shows credibility. It demonstrates that you have a competent team with the necessary skills and experience. Clarifies roles and responsibilities. It defines who is responsible for what within the organization. Builds confidence. It gives investors and lenders confidence that the business will be managed effectively. Legal structure foundation. It clarifies the legal structure of the business, which impacts liability and taxes. Here are the key components you should include. Legal structure. State your business's legal structure. Sole proprietorship, partnership, LLC, limited liability company, S Corp, or C Corp. Briefly explain why you chose the structure. Organizational chart. A visual representation of your company's hierarchy, showing reporting relationships and lines of authority. Management team. Detailed descriptions of key management personnel, including their titles, roles, responsibilities, and relevant experience. Advisory board. Optional if you have an advisory board. Briefly introduce its members and their expertise. Personnel plan. If applicable, if you plan to hire employees, outline your hiring plans, including job descriptions and anticipated salaries. Let's quickly touch on the common legal structures. Sole proprietorship. Simple, owned and run by one person. Owner is personally liable for business debts. Partnership, owned and run by two or more people. Partners share profits and losses and may have personal liability. LLC, limited liability company, offers limited liability protection to its owners, members. Combines some aspects of partnerships and corporations. S Corp, S Corporation, a pass-through entity where profits and losses are passed through to the owner's personal tax returns. C Corp, C Corporation, a separate legal entity from its owners, shareholders. Subject to corporate income tax. Service or product line. This section provides a comprehensive description of your products or services. It explains what they are, what they do, and why customers need them. It's about showcasing the value you bring to the market. Why is this section so crucial? Clarifies your offering. It clearly defines what you sell, leaving no room for confusion. Highlights value proposition. It emphasizes the benefits customers receive from using your products or services. Attracts customers and investors. It helps potential customers and investors understand the value and potential of your offering. Informs other sections. It provides essential context for other sections of your business plan, like marketing and sales. Here's what you should include. Detailed description. Provide a thorough explanation of each product or service. Include key features, functionalities, and specifications. Benefits to customers. Focus on how your offerings solve a problem or fulfill a need for your target market. What value do they provide? Pricing strategy. Explain your pricing model. How do you determine your prices? Are they competitive? Product life cycle. If applicable, if your products have a life cycle, e.g., from introduction to decline, briefly discuss it. Intellectual property. If applicable, if you have any patents, trademarks, or copyrights, mention them here. Production process. If applicable, briefly describe how your products are manufactured or how your services are delivered. Marketing and sales strategy. This section details how you plan to attract customers, promote your products or services, and ultimately make sales. It's the roadmap for how you'll get your offerings into the hands of your target market. Why is a solid marketing and sales strategy so important? Drives revenue. It outlines how you'll generate sales and achieve your financial goals. Attracts investors. It shows investors you have a clear plan for reaching your target market and achieving sustainable growth. Guides your efforts. It provides a framework for your marketing and sales activities, ensuring consistency and focus. Competitive advantage. A well-crafted strategy can differentiate you from competitors. Let's start with the marketing strategy. Here's what you should cover. Target market analysis. Briefly reiterate your target market. Who are you trying to reach? Marketing channels. Identify the channels you'll use to reach your target market. This could include digital marketing, social media marketing, search engine optimization, SEO, email marketing, paid advertising, PPC. Traditional marketing, print advertising, radio, television, direct mail, networking events. Content marketing, blog posts, articles, videos, infographics. Marketing message. What message will you communicate to your target market? What are your key selling points? Branding and positioning. How will you position your brand in the market? What image and message do you want to convey? Now, let's move on to the sales strategy. Sales process. Outline your sales process from lead generation to closing the sale. Sales channels. How will you sell your products or services? This could include direct sales, sales team, online store, retail store. Indirect sales, distributors, wholesalers, retailers, affiliates. Sales tactics and techniques. What specific tactics will you use to close deals? Customer service and retention. How will you ensure customer satisfaction and encourage repeat business? Financial projections. Financial projections are estimates of your future financial performance. They show potential investors and lenders how much money you expect to make, spend, and need. Why are financial projections so important? Securing funding. Investors and lenders rely heavily on these projections to assess risk and potential return. Internal planning and decision-making. They help you make informed decisions about pricing, budgeting, and resource allocation. Demonstrating viability. They show that your business has the potential to be profitable and sustainable. There are 3 main financial statements you'll need to include. Income statement. Profit and loss statement shows your projected revenues, expenses, and net profit or loss over a specific period, usually 3 to 5 years. Cash flow statement. Tracks the movement of cash into and out of your business, showing your ability to meet short-term obligations. Balance sheet. Provides a snapshot of your company's assets, liabilities, and equity at a specific point in time. Here are the key components you'll need to develop. Revenue projections. Estimate your sales revenue based on your pricing strategy, target market size, and market share. Cost of goods sold, COGS, calculate the direct costs associated with producing your products or delivering your services. Operating expenses. Estimate your day-to-day expenses, such as rent, salaries, marketing, and utilities. Gross profit. Calculate your revenue minus COGS. Net income or loss. Calculate your gross profit minus operating expenses and taxes. Cash flow projections. Project your cash inflows and outflows to ensure you have enough cash on hand to cover expenses. Startup costs. If applicable, detail the initial investments required to launch your business. Funding request. If applicable, clearly state how much funding you need and how you plan to use it. Creating a robust business plan is a crucial step for any entrepreneur. It's a living document that should be regularly reviewed and updated as your business evolves. We've covered the key components in this video, but further research and professional advice may be beneficial depending on your specific circumstances. Give it a like if you find this video helpful, subscribe to the channel for more entrepreneurial content, and hit that notification bell so you don't miss out. Thanks for watching and see you in the next video.